Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, thanks for joining us today. Today we're talking about the Barron's list of the world's top 30 CEOs. They come out with this every year. And so what we're going to do is run through a few of them and talk about who really is justified being on this list, who's kind of filling the spot, and who was missed out that should have been on the list. And then finally, we're going to talk about contenders for next year. So first of all, Sam, who do you think really deserves to be on these lists right here? Who's really been either visionary or a growth leader or a turnaround expert?
So I think, this is kind of a cop-out answer, but I think it's tough to argue with Jeff Bezos and what he's done with Amazon. I mean, he has innovated or revolutionized the retail space, and then they're a retail tech company kind of thing, and he's just been crushing it. It's tough to argue with him. Mark Zuckerberg's on here. Kind of a surprise given the scandal earlier, but I do think it's warranted. And, in my opinion, I say it all the time, I think Facebook is on track to be another Google. And so I think if you can replicate, or I guess Alphabet, if you can replicate Alphabet, then that's something that a lot of people have tried to do and can't do successfully. And I think he's actually kind of on track to doing that. So I guess those are two obvious answers. Who would you go with?
Yeah, so as far as the visionary founders go, I would say that Jeff Bezos should be on that list. He's done a tremendous job with Amazon, and what he's really done with Amazon, he's figured out ways to disrupt existing industries. And he's not really done it just once when he did it with books. I mean, he's done it with a multitude of industries. And now he doesn't even open his mouth. He has other people leak certain announcements, and it can destroy certain stock values. Similar to what we saw last year when Amazon bought Whole Foods, Kroger stock went down 40%.
Yeah, and not even just Kroger and like a traditional grocer, but you got Target, who also got hit really hard, and it's like that's not even a main piece of Target's, or it's not that big of a piece to Target's business model.
Yeah, so I think Bezos has done a fantastic job there in terms of being visionary and being a leader. You mentioned Mark Zuckerberg, and I think he's visionary in a certain respect, but I also think that, I'm not sure if he's a leader. When you have the uncertainty in crisis management like he had about a few months ago, I'm not sure if that's leadership. It wasn't really until Sheryl Sandberg stepped up when things started to get a little bit more peaceful at the company. I would give a shout out to Reed Hastings, actually, because I think a lot of people kind of look down on him and say, he's just kind of lucky, right place, right time. They're not really generating free cash flow. They're spending all this money on just creating content. But at the end of the day, Netflix is a go-to destination to view content. I mean, it's right up there with YouTube. And so what Reed Hastings has done is he took a mail delivery DVD rental and he's put it all online within the course of 10 years. And now it's a must-have for consumers, especially in the United States, but even around the globe. And I'm really impressed with how well they've done internationally when you consider that you need different content for different countries because a lot of people can't speak the right language.
Yeah, and what's funny is we both come out and say Jeff Bezos definitely should be on there. What did he do? He took a mail delivery book company and turned it into this online giant kind of thing. And so Netflix, again, you can say right place, right time, but Bezos, of all things, I remember when Amazon came out and they were, shipping books, and I was like, who in the world, how is this company ever going to survive? And they innovated, they pushed on, and now, it's a monster company. Netflix is the exact same story. It's just, it started, 10 years later or something. I think he's I think it's a good example. You talk about not generating free cash flow again, Amazon. Not a lot of cash flow there, pouring it all back into the company. So I agree with the Reed Hastings.
But the thing that is a common thread in all these three, what we've talked about, whether it's Zuckerberg, whether it's Bezos, whether it is Hastings, is that they are able to generate returns on their investment. Otherwise, their stock would not be where it is. They're able to reinvest all that cash into the company and generate tremendous revenue growth. And that's what they've done. So if we look at the visionary founders, we've talked about people we thought should be on the list. Is there anyone on that list who you think should not be? And just in terms of the visionary founders. And I could help you out here, actually, because I don't think Larry Page should be. I think that he is a visionary founder, but I'm not sure he's the leader he was when he was running the company on all the time. I think that when you talk about Alphabet and Google, it's a much bigger company than just Larry Page's search engine, what it used to be. I give Larry Page a ton of credit for creating the company that Alphabet is today, but I'm not sure if he's one of the top 30 CEO leaders in the world today.
See, I would actually disagree, because they are still growing revenue by what, like 30%, something like that. I mean, they've been doing it for a long time too. You know, like I don't remember who, if it was Barron's or who, somebody a while ago had written an article about Alphabet and how it's a growth company priced like a value company, and basically saying like now's a great time to buy them. Yeah, their growth has been incredible, and for it to have just started off as a search engine and it hasn't slowed down, that's incredible to me. I actually think I agree with Larry Page being on there. And
then if you talk about people who should be on the visionary founders list who isn't, I would put Jack Ma right up there. I mean, I think Alibaba, what has been created with Alibaba is phenomenal, because I think a lot of people think about Alibaba as the Amazon or the eBay of China, but they have a lot more than that. They have this thing called Alipay, and they have a way to track people's decision making and evaluate credit risk by monitoring everything that they do. So in China now, if you sign up with this platform called Ant Financial, they will track who you associate with, your friends and everything, and cross-reference that to determine a adjusted credit rating for you. So if you hang around people who are of poor credit worthiness, that will negatively impact your credit rating as well. I think that what Jack Ma is doing is not seen very well from the outside, especially in our part of the world, but it's revolutionizing China.
So I would actually disagree. So Alibaba, you think about everything that you named up until the last thing that they've done has been copying somebody else's. You know, it's like you say that the eBay of China, or the Google of China, the Amazon of China, it's like they've just pulled a bunch of different big companies together into one and put it in China. In terms of visionary, it's not there. Like, you're just copying people. Again, I gave credit to Mark Zuckerberg for being able to replicate Alphabet. A lot of people have tried, a lot of people have failed. So there is credit there to say, okay, well, you tried to replicate a bunch of these big industries or big companies, and you did it. So congrats, but I'm not sure that that's necessarily innovation. But then you mentioned being able to track who you associate with to give you a customized credit rating. I think you're right that on our side of the world, it's not being viewed very favorably. That's probably the reason Zuckerberg got in so much trouble, or Facebook got in trouble, because they're getting too much information and sharing too much information. And so if Facebook wanted to, they could have done that already. That's not, he's new or first in the market to actually do that, because I guess over, like in China or whatever, like that's okay and they view that favorably or whatnot. But I think Facebook, Alphabet, Amazon, any one of them could have already done that if they wanted to. They probably do that, but they're not giving the information to somebody. So I actually disagree. I would leave him off until he, comes up with something on his own. Then I'd leave him off.
Part of the thing too for Chinese leaders is that I think that there have been so many issues with Chinese CEOs. I mean, not the least of which is at Baidu, where they had no end of problems, that when you have someone who's actually been able to lead a company from origination to maturation. I think that speaks well for Jack Ma. But again, maybe it's competing against a pretty low bar.
Yeah.
So if we look at the world's best CEOs, the growth leaders, who really stands out as, yes, they should definitely be on this list?
In terms of people who truly stand out, I actually think that Andrew Wilson for Electronic Arts, I was shocked to see him on there. I didn't even think about it. And because in my mind, video games have kind of faded out. I don't know if that's just because I've gotten older, but for him to have, really brought Electronic Arts back to life, and they're dominating, even here around the office, we're playing more and more video games, and, we're 27 years old. And so I think that's that's a pretty impressive step to kind of push that back out.
Yeah, and I would say people who really deserve to be on here are Shantanu Narayan, Adobe, and Jamie Dimon from JP Morgan. At Adobe, what they've really done extremely well is they transitioned from being we're going to sell you Adobe Photoshop and then we're going to wave goodbye. And now they say, you're going to subscribe to essentially our ecosystem. And so instead of getting paid once for all this, they're getting paid on a recurring basis. And Adobe's really led in this respect. I think they even led really Microsoft in the transition. I think Microsoft's transition has been more spectacular simply because it's a larger company. But I think Adobe's really led the conversion from selling a single product to developing that recurring revenue stream. So I think I give a lot of credit to Adobe there. And then JP Morgan, just because ever since the London whale, Jamie Dimon's been able to, he loves the limelight, but he's been able to stay out of it for the wrong reasons, which is good. And maybe this doesn't last. Maybe we look like idiots this time next year when there's the scandal circuit hits JP Morgan, because it does seem to go in a cycle. Like it hits from Citigroup to Bank of America to Wells Fargo's going through it now. Maybe JP Morgan will be the next to fall. But
it's funny you mentioned, we talk about Jamie Dimon. I would have said him too. I'm so impressed, or I'm always amazed when he makes a comment and like the Journal, Bloomberg, like all of them are like trying to push it out. And it's like, if he's bullish on stuff, the market goes up that day. Like it's always incredible to me, like how much respect I think just the market in general has for him. He's one of the guys that if he comes out and says something, people listen and think he's right. And you don't get that kind of respect by chance or by luck or being in the right spot at the right time. Like you earn that type of respect. And so I've been really impressed with Mr. Dimon.
I agree. In terms of people on the list who shouldn't be, there's one that really stands out to me, and that's Bob Iger of Disney. I think he's been a little bit of a victim of the circumstances in terms of ESPN just continuing to be a victim of cord cutting. But the fact of the matter is he has not managed that business well. He has not led. He kind of shunned responsibility and gave responsibility almost for ESPN to be operated as a separate entity. And ESPN had a whole host of issues last year. The CEO of ESPN was let go. There was a big write-up in the Wall Street Journal the other day, just not a clear leadership message at ESPN. So I don't know how you can have a CEO whose biggest division has clear leadership issues and then put him on the list of one of the world's best CEOs. So credit to Iger for developing the ecosystem around Star Wars and Marvel, but a lot of that was created ahead of time. And the ESPN issues just continue to rear their ugly head.
It's funny, I would agree. I don't think he should be on here. And he has done a good job in creating the ecosystem, but he's also made a bunch of very bad moves, in my opinion. Like, one of the reasons that Barron's puts him on here is talk about, they say until recently, now Disney's finally going digital, full like streaming capabilities with the ESPN Plus or whatever. it's 2018. Like you were way behind. ESPN has struggled year after year after year after year. Now you're like, oh, but we're gonna go. Now you can stream it or whatnot. You're too late.
The only difference between the current ESPN version and the previous ESPN version is that it's called something different, I think.
Yeah.
And you actually have to pay for it. The previous ESPNs, I mean, how many have they had? They've had ESPN, 360? They had ESPN 3. They had Watch ESPN, and now they have ESPN Plus.
And none of them have been good.
None of them have been good.
But, yeah, so that, to me, that's a huge negative for a reason why not to put him on there. It's like you were so late to the game doing this. They mentioned buying Pixar, Marvel, and Star Wars. Yeah, so I think those are really good purchases. But then you completely botch every new Star Wars movie.
Yeah, I mean, we're in the midst of these headlines where Solo is dramatically underperforming estimates from the box office.
And the thing is, I actually saw the Solo movie. I thought it was fine. But the reason I thought it was okay was because my expectations were that this is going to be one of the worst movies I've ever seen. Because the previous Star Wars movies, the last 3 that have come out, have been so bad. They've been so bad that I thought there was no way this is going to be any good at all. And it was all right.
And what kind of world are we living in when a Star Wars movie is just fine?
Yeah.
I mean, we should not be calling a Star Wars movie fine. That's
right.
Just
and so, anyways, they give them credit for great purchases. And I'm like, yeah, that's a good purchase, but then you absolutely botch it. The ESPN thing, you have this gift of all sports. None of us at the office watch ESPN anymore, and that's not by choice. It just happened. There was no reason for us to go to ESPN. And now you're going ESPN Plus. Whoop-de-doo. I'm not watching more ESPN now because it's on my phone. Like, that train's already left.
Yeah, and as far as people who should be on the list, you actually brought up one who I've doubted a long time, and that's Brian Krzanich at Intel.
Yeah, so one of the big things in the article was, great purchases. And so I'm usually against large acquisitions. But Intel bought Mobileye, which has really – that's basically what has helped them turn the corner in terms of their data center growth, and they're pushing into the autonomous vehicles. And that's what's really, propelled them over the last, I guess, 6 months, 9 months. And so, anyways, I think Intel has had its struggles over the last couple of years, and the article makes note that this isn't just a one-year thing. Like they look back over the last 5 years for things. So I'd say Intel Krzanich doesn't deserve to be on there yet, but the way that the Mobileye acquisition is panning out, I think that he could be a contender for next year.
And they're also making good inroads into the data center, something that was very much doubted that they could actually do this time last year. I know I was one of those doubters saying that, they've been talking about data center forever, but they haven't been able to make it work. But now they're actually seeing good growth in data center, and they're seeing good margins as well. So if we move to the final category, and that's the turnaround experts. And this is kind of my favorite category because it really shows who can take something that, take a lemon and make lemonade out of it. And that's really the mark of a very good CEO, in my opinion. So on the list this year, we have Mary Barra of General Motors, Satya Nadella of Microsoft, Hubert Joly of Best Buy, Phoebe Novakovic of General Dynamics, and Carlos Tavares of PSA Group. So who really stands out to you on that list?
It's tough to argue with Hubert Joly at Best Buy because I feel like Best Buy has been a running joke with everyone. Like, you don't go to Best Buy, and all of a sudden Best Buy has just really taken off. And so I definitely think that he deserves to be on there with the way that he's turned the company around. I'm impressed with it.
I would say Jolie, Best Buy always generated a ton of free cash flow, but no one really believed that they'd continue to generate this free cash flow because they were saying, if you're buying an electronic, you would go and buy it on Amazon. And what Best Buy did, they kind of got, after getting behind, Hubert Joly came in and really changed it around. So if you want electronics and you want it that day, you go to Best Buy, you get it, and then you move on. You don't have to worry with Amazon. So he did a really good job in changing that message. And I'm not sure how much of that was actually changing things on the ground floor, but he was really able to change the messaging of that. And when you're talking about a good leader, that's what you want. I think that Mary Barra is one of the world's best CEOs. I mean, she would be in the top 5.
Really?
And the reason for that is when she took over GM, this is when they were having all those ignition problems and these cars just kept going into the poles and people were dying. And they had a huge legal settlement, and Barra was looked at as a very bad CEO, can't get the margins there. No one believed guidance. They came out with this 2015 plan and then 2016 plan and said, we're going to get margins here and there. And no one believed it because they said there's no way that GM can get there. And what Barra did is she took this company and she started out really on the ground floor at GM. She's worked there in her entire career. And she didn't rush, but she did things the right way. And now GM is the best car company in the United States of America. Ford looks like a disaster now with their management issues. And I think Barra's really shined. And GM is really leading on the autonomous vehicles. Among the current car manufacturers, GM is leading in that. So big shout out to Mary Barra in terms of turning around GM. Remember, this is a company that was bankrupt in 2009. That we had to bail out. So there are a few who did not make this list who I think could be candidates either next year or should be on the list this year. And I'm just going to kind of run through them quickly. The first is Warren East. So he took over from Rolls-Royce in 2015, and the stock was trading about $6, I think, $6 or $7. And he took guidance down once, he took guidance down again, and he took guidance down a third time because they're having big accounting issues with this new engine that they were coming out with. Stock today trades at over $11. And the reason Warren East has done so well is because he got out ahead of the story. When you have a disaster, you got to get out ahead of it. You got to reset the expectation. And he did that, and the company, far from being bankrupt today, is actually still one of the top 3 engine manufacturers in the world. And then 2 bank CEOs who could be eligible next year, Mike Corbat, and I know you'll have stuff to say on Tim Sloan, the new CEO at Wells Fargo. Mike Corbat's at Citigroup. But what Mike Corbat has done at Citigroup is take one of the worst bank holding companies in Citi Holdings, and he has really negated that. That is now in the past. And what Tim Sloan is now dealing with in terms of the asset cap from the Federal Reserve not being able to grow assets this year, he's really in the midst of it. So he could be, if he does it right, he could be on this list for next year. What are your thoughts on that?
Yeah, so the interesting thing is you mentioned Warren East and how he got out in front of an issue. And I do think that that's like very notable. You know, a lot of people are you see it all the time, being more reactive versus proactive. And so it's funny, you got Tim Sloan, who wasn't given the opportunity to be reactive or to be proactive. Now he's having to be essentially reactive. And so it'll be interesting to see what he does, how transparent he is. Like, I think if he gives guidance and says we're going to earn X dollars a share this quarter, it would be in his best interest to come in and hit exactly X dollars per share. You know, just like any bit of trust he can get so that he's just fully transparent. I think that would do a lot of good for him. And then Corbat, I think Tim Sloan has a lot to learn from him in terms of just, again, taking a bad situation and just making the best of it and just grinding it out until you can really get it turned around. And I do agree. I think Tim Sloan has a chance. The biggest drawback to him is that Wells had a scandal over a year ago, right? And it just like seems to keep resurfacing. How do you bury that?
And it's tough too, because a lot of these turnaround stories they don't happen in a year. Mm-hmm. They take 3, 4, 5 years to actually. I mean, Mary Barra, I think, took over in 2012, 2013.
I think so.
And now it's 2018 and she finally made the list.
Yeah.
I mean, it takes a long time to get these stories to turn around, but if they're given the chance, they do have the opportunity to make this list someday. And the last one on here, and this is probably the earliest in the story, and this is John Flannery. So he obviously took over for Jeff Immelt and found just like a dumpster fire underneath the surface of these manufactured earnings results. And so what he's done is he's kind of taken the Warren East approach. He's reset the bar. But the question is the bar enough, and can he jump over it?
Yeah, I'm going to tell you right now, he will get on the list the same day that Immelt gets on the list. Like, it is just such a dumpster fire. He reset the bar and then didn't reset it well enough and had to reset it again, and isn't like guaranteeing the dividend and stuff. And it's more of the same. Immelt had, again, he was supposed to come in and sell off all these assets and do the same thing that Flannery was supposed to do, and he just made it worse. And I have there's nothing in me that says that it will be any different this time. I mean, he's not off to a great start, in my opinion.
He does need a few years. He needs at least 5, maybe 10. I don't know. It's just a shame what's happened at GE because it was such a great company. All right, well, that'll do it for us. Appreciate you sticking with us. And again, it's a good Barron's article. I recommend you read it. We do own some of the stocks. It'll be disclosed in the comment section. Thank you.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.